I don't know about you, but I had an absolutely bad week last week. Gold, which I sold at 2,950 after almost doubling my money, passed 3,100 and is still continuing upwards on the tariff talks. And the stocks, they went down. Most of my stocks went down, NIO in particular. So it was absolutely a bad week, but I continue to buy more, pushing up my share in the stock market and will continue to do so. This is how I've been trading for years. And you, my friend, you are listening to the StockInvest.us podcast as we're heading into week 14. And the podcast, by the way, is named Trading Tips with Jim, and of course then I will be Jim. But in this week's podcast I will try something new. You will have, not you, but I will have a small talk with AI during the podcast because, as you know, AI is the future. More about that in just a bit. I told you I had a very bad week. More or less across all my shares was down, and the 8 stock trade tips which I gave you had the worst performance they had since I started with it, with an average loss of 7.54%. Absolutely total disaster. 2 of the stocks were down 20%. Only one stock, Royal Gold, managed to go up, climbing almost 3%. No big wonder why. I mean, gold is in the wind right now. So what are we looking at for the week ahead of us? Well, there will mainly be focus on tariffs and job numbers. Some of the experts expect us to head into stagflation. This was the big scare during the 4 last years, that we will head into stagflation, but pumping more and more money into the economy managed to keep that away. But now it is again on the lips of people. It's a situation where inflation remains sticky and unemployment rate goes up, economy go down, and it's just a bad situation. Personally, I do not believe that at all. I think we are in a transitory phase. It's just all the things that happened over the last 4 years are now being hit hard, and we are at a turning point. The bigger things, so we have these job numbers during the week, but well, just let's mention them. There will be job openings numbers tomorrow. Expected to go down a little bit from 7.74 million last time to 7.69 million open jobs. We will see. That number will get tomorrow. On Thursday there will be the normal jobless claims numbers, if I remember correct, expected to be around 224,000. Friday will be March unemployment number. They are expected to remain steady at 4.1%, but labor participation is only at 62.4%. Very low labor participation rate, and more people will come back to work, which will keep less pressure on the work market. For these things, I'm pretty sure you have to see how money was spent last 4 years, how they were spent. That's the main reason why labor participation rate is as low as it is, and I believe many of these now will get back to the work market, keeping less pressure on the work market, which again should affect prices. So that's the main events. It's tariffs, it's these job numbers, and of course, again, are issues with the Ukraine war. We know US is pushing for peace, want peace, but Ukraine themselves, and especially France and maybe UK, do not seem to think peace is the way to go. Trying different things to stir the situation, and these can easily escalate again, and that will just add fuel to a bad stock market. Just so it's said. So if there is a tariff scare, more bad news from Ukraine can cause more harm. Then we have Iran, which have been trying to get to a nuclear stage for years and years, been held back. That thing is also a little bit in the news. So we have some geopolitical issues. The tariffs I do not worry so much about, because it's just trade negotiations. These things will settle themselves for the better, I believe, for most countries. While these geopolitical issues, they have to somehow find a solution. But we are in a situation where we have those who eager for peace, and those who think that the road to peace is more harm. And we will see how it will play out. There will be a few quarter results this week, but not much. They will soon start again, actually. But on Wednesday will be BlackBerry. Anyone who remembers BlackBerry? BlackBerry was, I believe, the most valuable company once upon a time, just to die, or not die, but at least fall to absolutely nothing over a few bad mistakes. If you haven't seen the movie, I think you should. You will find a movie about BlackBerry. Very, very funny comedy movie. Absolutely interesting. Will give you a good insight into things and how BlackBerry went down, Apple went up, for instance. Enough about this. There is buy and sell signals. I'm not sure. Maybe we should just talk slightly first before we get to the buy and the sell signals. Talk with the AI. And I forgot to mention that NASDAQ, of course, had a super bad week, down 2.64% for NASDAQ, and Dow Jones just under 1%, 0.96% down for Dow Jones. S&P even worse, I believe, if I saw correct, but indeed just a bad week. So what about AI? AI is coming, and if you haven't heard much about it, you will, because it will be your new future. We are using AI a lot at Stock Invest. It's one of the focus areas. But here is the one thing that I want to teach you the very first. It's very much about what you feed the AI. You have to understand that AI has a knowledge cutoff. It doesn't know everything until the very last minutes. They are getting better, much better every single day, accessing more real-time data, etc. But in general, this is one of the things. The other thing is that, of course, they hallucinate a little bit and make up some story. In this particular test, and I hope it will be okay, what I've done, I've just pasted AI a lot of information about Tesla. Part of the AI things that we do at Stock Invest, and which I work on daily, is trying to find unique data, create unique data sets, feed this data to the AI, and use AI's reasoning models, logic, etc., to try to get to better answer. So I fed AI a lot of data about Tesla, and we'll just ask a few questions. These things include the latest financials, latest prices, how it's doing compared to peers, etc., and we will see. Let's try. Hi, and welcome to my podcast, Trading Tips with Jim. How are you?
Hi, Jim. I'm doing well. How about you?
Oh, I'm fine, thanks. May I ask what your name is?
You can call me Gaia. What's on your mind today?
Well, I have a few questions for you, and I wanted to introduce AI to my listeners. And one of the things that I really hope to do is help my listeners reduce their losses and increase their gains. And can you just give us 3 things that will help you reduce your losses and 3 things that may increase your gains?
To reduce losses, 1. Use stop-loss orders to limit downside. 2. Diversify to spread risk. 3. Stick to a trading plan and manage emotions. To increase gains, 1. Research companies thoroughly. 2. Focus on long-term trends. 3. Use technical analysis for better timing.
No, thank you. I love technical analysis. But Let's look at Tesla's latest financial results. What are the positive and the negative things in the last quarter report?
In Q4 2024, Tesla's revenue rose by 2% to $25.7 billion, but net income dropped over 70% to $2.3 billion, partly due to a one-time tax benefit in the previous year. The company sold $692 million in regulatory credits, which contributed to profits. For the full year, revenue increased by 1% to $97.7 billion, but net income fell by 6%.
How is Tesla doing compared to peers?
Tesla's competitors are gaining ground. BYD reported $107 billion in revenue for 2024, surpassing Tesla's $97.7 billion. Additionally, Chinese companies like Xpeng and NIO are expanding their market share in the EV sector.
Thank you. But Tesla is much more than just cars.
Yes, Tesla also focuses on energy products like solar panels and battery storage. And they're investing in autonomous driving technology and robotics.
Okay, so there you got it. That was just a small talk with AI, and AI is really on the rise and will continue to be. So it will be your personal friend in, I believe, most aspects of the world. You're going to get very used to it if you are not. But let's get back to the podcast, the content of the podcast. So that was a little bit about Tesla. Just a small notification here. I have personally invested a chunk into Tesla. I bought Tesla at $239, I believe 2 weeks ago, mentioned in the podcast. So it has a good opportunity, and I might actually invest more into Tesla. Will it be right? You will have to see. But in my opinion, the future world is electric. It's not fossil cars. It's about timing. We will see if timing is correct or not. Across all the stocks that we analyze at StockInvest.us, 21% is giving buy signals. That's down from 27, and NASDAQ is at 7. And for those who follow me, maybe remember that I said the best trades I ever did when I was buying NASDAQ at 7% buy signals. I've been buying up NASDAQ over the last few weeks, because it's been at 8, 9, and now it's down at only 7% buy signals. I have increased my amount of shares from about 30% of my holding to, I believe I'm well up in the 60s now. I probably will push it up to 75%. Increase my exposures into the market. I've kept a lot of money in the bank, expecting a downturn as NASDAQ hit 19,600, 700, etc. In my opinion, that was way too high. I was expecting a correction, and when the correction came, I wanted to get back in to the market with more exposure. New York Stock Exchange is at 20, London at 18 after falling from 26 down to 18. Also Frankfurt fell from 28 to 18. Tokyo from 45 to 29% buy signals. Shenzhen from 35 to 23% buy signals. National Stock Exchange of India from 28 to 16% buy signals. The big money managers, they are actually starting to buy stocks. They are buying more than they are selling. Usually early sign that the professional thinks that markets are at a good level. And I personally believe so, but it remains to be seen if this is the case. And as I mentioned, gold just continues upward. Currently, before starting the podcast, sitting at $3,148. And do I regret that I sold the gold at $2,950? Yes, I do regret it a little bit, but I have to stay true to my visions. I know that I will not hit the real top, the real bottom, but I wanted to liquidate my gold positions to enable more cash for higher risk. Yeah, absolutely going against the currents here. I believe this will be an option, and hopefully I will not be wrong. 10-year treasury yield 4.25, staying steady, was 4.25 last week. Oil a little bit up, $69, mainly over all the Iran issues currently popping up. And that is a bit of a concern because we need energy to go down. But I saw some US numbers. US is ramping up their production of oil, and hopefully we can push oil way down despite having exposure in oil, because that will get inflation down. And as inflation will go down, money will get back into the stock market. 17 minutes, we will speed through and I will just give you the results of the 8 stocks last week. I said it was the worst performance because they were in average down 7.45%. And except Royal Gold, everyone was red. Royal Gold went up 2.95%, that was the best of them, while UP Fintech went down 3.23%, Root went down 23%, Adeptus Biotech 11%, Vodafone remained unchanged, actually at 0. Gossamer was down 20.51%, and Interdigital was down 4.76%. So, meaning if you bought on Monday on opening and you sold on Friday on close, all of them would, except one, would be for a loss. So you would have a loss much larger than the market in general. So absolutely nothing good from last week's buy signals. By the way, these are signals that are flashed in the system as possible buys short term. And I don't care about stop losses here, because you would have stop losses. That's the best advice I've been giving in this podcast for the last 5 years. Keep stop loss. You have to have a stop loss. That's how you reduce your losses. And the next part is, of course, to increase your gains. So you would have stop losses, and many of these stocks were actually in gain. Earlier in the week, it was Friday, was down 2%, I believe, the market in general, and then most fell. But anyway, that's how we will measure. That's how we will keep measuring, because we'll just look at the week, 1 week ahead, and see how it went. This week, Royal Gold still is flashing buy signals, and if you've been listening to the podcast, you know it's been with us for quite many weeks now, but again, flashing buy signals. Royal Gold will be one of the 8 stocks for the week that we will follow. Then there is Roper Technologies. It's machinery. It will be in this week as well. Currently trading around $582, quite expensive one. Then there is Mondelez International. It's a food related company, currently trading around $68. There will be Polymer, also been with us before. That's a property company, around $137. I will get back to the tickers, just let's get through it. Lexin Fintech, around $11. Credit Services is flashing buy signals. And then there is Take-Two, multimedia company. TradeWeb Markets, capital market company, at around $147 as we speak. And the last one will be EZCOR, a credit service. These 8 companies are flashing buy signals. We will follow them. Next week I will tell you how it went, as we are tuning the system to get better and better. And sorry, last week I did not have time to tune the system at all. But this week, hopefully, will be. Things changed rapidly last week, got caught up in other things. The tickers are RGLD, Royal Gold, ROP, Roper Technologies, MDLZ, Mondelez International, and then it is PLMR, Palomar, LX for Lexin FinTech, and TTWO, Take-Two, TW, TradeWeb Markets, and EXPWX Corp. These 8 companies are flashing buy signals. Will they be able to beat the market? I do not know. You will just have to stay tuned. Tune in next week and see, because then I'll tell you how it went, as we are chasing the goal of making everything better. Last part of this week's podcast is the $1,000 challenge, and that was a sad sight for sore eyes last week. Ending at 375, NEO is down 26.47% since we bought it. Is at the lowest I think it is. Bought it into the $1,000 challenge at 5.1. Now it is 375. Reason for the high fall is of course the bad markets, but also quarter results that were not as the market hoped for, and then the 25% tariff on auto cars. All of this combined to a huge fall for NEO, bringing the $1,000 challenge down to $2,145, $2,144.93 to be exact. So we have double the money, but we are dropping. Remember, we were almost up at $4,900 something dollars. Now we are down at $2,144.93. Absolutely bad. And the worst thing, I still sit in NEO, but now I have a hard time to see short way out of it, because it will take some time to forget about the quarter results, and we need to get back to a rising trend. 440-ish was very strong support levels, broken down, mean that this thing can just continue downwards, or it will pick up, get back up to the 4 level, walk between 4 and 5 for a long time. But sorry, it's nothing right now as we speak, and then I talk about the week ahead of us, that talks for anything other than a natural reaction up. It was, I think it's oversold. It's way too much down compared to the absolute value market position, and I think it's an overreaction. And that it should pop up to 440 or something, but hard to see it go back to 510 anytime soon. I will stay in it. You will just have to get back next week to see what else is new. As I said, it was an absolutely bad week for me. I hope you had a much better week. I hope you were able to go in green. That's my wish every week for you. I hope that you will be back next week when I will be back with next week's podcast. Until then, just have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.